Yes, my people, what are you man telling me? So right now we're on currently on gold. This is the 1 hour chart, but if we just go over to the weekly very quickly, see, we are pretty much trading all-time highs. So a lot of people probably are waiting for price to give them a pullback where they're looking for shorts. However, you only want to be following the SMAs. And yes, I understand that potentially the 200 and the 20 SMA is quite expanded. However, we only start looking for expanded reversals when price gives us some sort of failure. So, failing to take out a potential new high, um, and we end up taking out that low. We start to respect the 20 SMA. So that's the first signal that potentially price wants to head down a little bit, retrace, and then potentially expand again. But until then, you only trade what you see. You don't try and predict what's going to happen next. Right now, our all-time highs, and a lot of people are trying to short right now. A lot of people are trying to catch a pullback. But if price is not ready to pull back, trade what you see. So, anyways, we don't even look at the weekly, but that's just some sort of analysis for you guys in terms of the guys that use the higher time frame. But when we head over to our 1 hour chart, we can actually see that price is bullish based off the SMAs. We can see that we have this zone here where price might want to tap into. Potentially, you might use this area here as well, and you can kind of see it. I don't know if you guys can, but we can see that potentially, not potentially, but 1, 2, 3, 4, 5, and price has now pushed higher, and is obviously taken out that previous higher high. So now you could essentially draw a new zone once this candle closes, and then go about your day. So again, 1 hour chart. Price is gonna take way too long, so let's just head over to the 5 minute, and we can see that on the 5 minute price is technically bullish as well. So that area that I drew out on the 1 hour chart is this area here, where this is the 1, that's the 2, 3, 4, 5. Create a double bottom. We had a failure swing over there, as you guys can see there, and we ended up starting to push higher. But in this case here, would I have been able to take a trade? Absolutely not. Why? Due to the SMA. So now that we've gotten above the SMAs, I can start to look for something. But let me just show you again on the 1 hour chart. The area that I literally said before, you can see where we swept. We've had our 4 and 5, and then price has now pushed up. So when we head over to the 5 minute again, sorry, technically we have taken out this high. So, well, not yet, but essentially we are going to take out this high. So now, if there's an area that I would like for price to bounce into, what's it going to be? It's going to be from this area here first. Why? Because this is the S&D. This is the supply and demand zone responsible for causing this market structure break. Without this last down up movement, we wouldn't have been able to push and take out this previous higher high. Hence why we call this SNDR, and hence why this is an area of interest where we like for price to potentially bounce from. So if we let price play out, I mean, if I go to my, let me just go to my 1 minute chart quickly. So yeah, so this is the area that I'll be looking for to wait and see what price does. So when I let price play out, so we have now taken out that previous higher high. We have now, well, we're coming into the SNDR, the supply and demand zone responsible for causing this market structure break. So now that we've tapped into it, can I see an SBS? I mean, SBS is very, very subjective in this case here, because 1, 2, 3, 4, 5. The reason why I say it's very subjective, because someone might have the 2 there. Someone also might have their 2 there. So it really depends up to you. Either way, they both have to tap into the zone first anyways before we even start to look for anything. So let's just see if we get that sweep. So yeah, so now we've gotten that sweep. So now I want to see if price is going to respect this area and continue to push higher. So what can I do? I can start going down to my, let me just clear the chart quickly. I can start going to my, what's it called, 1 minute time frame, my lower time frame, and see if I can get some sort of change in order flow, see if price is going to start disrespecting bearish order flow, and if we're going to start respecting bullish order flow. 2, 3, 4, 5. We've had that sweep there. So now it's just about waiting and seeing if price wants to actually head on higher. Obviously, we've come from this market structure break, but technically it's the SNDR, the last down up movement on a higher time frame. So if I really want to narrow it down, I mean, I can use this area here. There is areas of supply and demand over here as well, which hasn't been tapped into, and even here, if I'm being very picky. So there's 3 levels within this SNDR that price could tap into and technically react from. Now it's just up to me to wait and see how I'm gonna try and approach this market and get myself in. So if we're looking at things from a structural point of view again, I'm gonna start from here. We made a low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We ended up making a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So again, it doesn't look that clear on that 1 minute chart, but I do not have the second chart on my trading view. But essentially, price needs to take out this high here, and then I can start looking for something potentially to try and get just to push the trade higher. Because remember, if we're trading between this low and we're trading between this high, everything inside is just internal structure. So internally, what we've been doing, we've been taking out lows. Yeah, so we've been taking out lows, so technically we need to take out that high, and then that's the first indication that potentially price has flipped. So if I just walk through it, okay, so we've now closed above that internal protected high. So now I could have some sort of pullback, hoping that price taps into the zone here and then potentially pushes higher. Again, remember, this is me looking for what's the word? Like an acute entry. I'm trying to be very specific. Remember, we still have the 618. If I draw my zone from this low to the high, we can see that we've already tapped the 618. We've already tapped it, and obviously price has already given us the 1-to-1, and potentially now you're waiting for the 1.6R. You see that? So you guys have to understand as well what entry methods am I using. If I don't see one thing, what's the other way I can potentially get myself in within this market? Am I gonna wait to be a bit more secure and wait for potential flips, by confirmed flips, or am I going to be a little bit more aggressive, and this, as long as the SMAs are above the 200, I might use a 618. Am I going to be using IBs? Am I going to be using CSSs? Am I going to be using areas of support and resistance? So it really depends. And even in this situation here, we technically have SBS model 1. You see that? So can you see how many things are starting to align? So yeah, let's just see anyways. Okay, so even here, technically we do have SBS, where that's 1, that's 2, that's 3, 4, 5. We did sweep. We did sweep over there. And even if I was to draw out my fib from this low to this high, we don't quite tap the 618. However, we do tap the 50%, but then are you someone that's willing to use the 50%? And then price takes out the previous high. So in this situation here, you may have been able to catch potentially a 1-to-1. Maybe in the second shot you might have seen something nicer. However, what's happened now? We ended up taking out these lows again. We failed to actually take out these lows. As you guys can see, they are wicks, but you can now see that this is also an area of support and resistance. If I turn on my indicator, yeah, so this is now an area of support and resistance, so you could also use that as an extra confluence. If I get my RSI, you guys can see for yourself that this is higher. All of this area here is higher. but all of this area here is lower. So that's an extra confluence you could also use. You see that? So not only do you have an area of supply and demand, we also have an RSI divergence that just shows that this is a fake MSB potentially on the second chart. We respected the 200 SMA, and even here, remember first flip. I know we'll say never trust the first flip, but we wick below these lows. We've now had our confirmed flip technically, because we didn't close below the lows. There, wait and see if we can get a pullback, but technically these highs have been taken out. So I now got to be aware if I want to try and trade something within here to take me higher. Just let price play out. Yeah, so yeah. So what ended up happening? Tapped into this area of supply and demand again. Once again, potentially SBS model 1 from this area here. This. Yeah, from this area here, potentially SBS model 1. 1, 2, 3, 4, 5. It's not ideal, but you know, sometimes these things are gonna happen. Price pushes up. What happened? We end up taking out this high here, and then you have another SPS. Again, it's not really ideal, but 1, 2, 3, 4, 5, and then price pushes up again. And what did we do? We tapped into this area of supply and demand, but also this is the unmitigated mover region. Remember, we're still above the SMAs, and price pushed up. So despite you potentially not taking a 618 entry, no problem. You could have potentially been able to get yourself in within this price action if you know how to trade it, or you might have fell a little bit short and then you'd have lost that potential trade or caught yourself a break even. However, this internal MSB, we didn't actually take out these lows, as you guys can see for yourself. We've only just wicked. This is an area of support and resistance. And remember how I said, because I'm making this video too long, remember how I said this is also an area of supply and demand. Can you see how we've tapped into it? We've pushed higher. However, this area of supply and demand was not enough to take out this high. So where was the next one that I said before? This area here. And what's happened? We've literally tapped into it, and this area of supply and demand was enough to take out this high. You see that? So when you just add confluences and you add all your little things, you are going to be alright. So even here, SBS model 1, you know, where you have your 1, 2, 3, 4, 5. Potentially you might not know how to get in this trade, so you might avoid it, no problem. And then now you have this area 1, 2, 3, 4, 5 tapped into this unmitigated mover region. But where are we coming from? We're coming from this higher time from MSB, and this is the SNDR. The supply and demand zone responsible for causing this market structure break. And what happened? We tapped into it, and we tapped into this SNDR unmitigated mover region, and we ended up taking out our previous higher high. So going back to what I said before, when we go to the 1 hour time frame, price is bullish, and yes, you might be waiting for expanding reversal, but there's no failures. Remember, expanding reversal has to come with failures, and then we start to respect the 20 SMA, you know, and then you can start potentially trying to look for potential shorts. Until then, trade what you see. You know, don't try to assume anything. I made this video way too long, but it is what it is. I hope that was insightful. But as I always say, victory belongs to the most tenacious. Wherever you're in the world, I'm wishing you guys a good morning, a good afternoon, a good evening, and a good night. And I'll see you lots tomorrow. Peace and ciao.